With 5 national parks, 44 state parks, and the greatest snow on earth, Utah has plenty of reasons for the 10 million visitors who come here each year to visit our state. And all that tourism is reshaping Utah's housing market. A new report from the Kem C Gardner Policy Institute shows short-term rentals are making a significant impact on Utah communities. Dayon Eskich is the Senior Research Fellow at the Kem C Gardner Policy Institute. Dayon, thanks for joining us to give us some insight into this study.
Thanks for having me.
All right, so your recent report highlights a significant increase in short-term rentals. Tell me what's driving the growth and why that's a good thing or a bad thing for our state economy.
Yeah, I mean, you just mentioned it in your opening. We're a tourism destination, and that's been a primary driver of the growth we've seen over the last couple of years. So between 2021 and 2023, we saw short-term rentals increase just a little over 39%, increasing by about 6,600 in that time frame, and bringing our short-term rental listings to about 23,400. Well, it's a good thing because we're seeing more visitors in our tourism communities. A lot of our, outside of Wasatch Front, a lot of our communities depend on that tourism. But the negative is some areas are losing housing stock as a result.
So certain counties are seeing a higher concentration of these short-term rentals. Are short-term rentals, you mentioned it's driven by tourism. Are they also clustered around the national parks and ski resorts?
Yeah, so if we look at where they're at, so 60% of our short-term rentals are within 3 counties, Summit, Salt Lake, and Washington. But if we're looking at more broadly, about a little over 24% of those short-term rentals are within a quarter mile of a ski area boundary, and over 80% are within 10 miles of a national park or a national monument or a state park.
So there's a concern about the impact of short-term rentals on housing availability. And Utah is a state that's going through a housing crisis, not enough supply for the demand that's here. What did your research find regarding the impact that STRs or short-term rentals are having on housing availability?
Yeah, it really depends on geography. So if we look at Salt Lake County, for example, about 1% of our housing stock is occupied by short-term rentals, and a heavy portion is up the Cottonwood Canyons. More broadly, if we looked at, for example, Summit County, their short-term rentals represent about 23%. Park City, it's over 40 if we're just looking at municipal boundaries. But if we're looking at new construction, so from 2022 to 2023, for example, in Summit County, for every 10 residential units we built, there was an increase of 14 short-term rentals. So that means not only are we not able to keep up with the demand, but we're also losing existing housing stock to short-term rentals. And we saw similar numbers in Grand County in the Moab area as well.
So for every 10 new housing units that are built, 14 end up as short-term rentals. That means some of the existing housing is converting and the new ones are all going to short-term rental, and you're not really making any growth. Am I understanding that correctly?
Yeah, we can't quite distinguish whether new construction is going to short-term rentals, but just as a lump sum, we're losing.
So falling behind the pace, and that's just exacerbating the issue then.
Exactly, yeah. But again, it's geography specific.
Yeah.
Other than the statewide, yeah.
So with rates that high when it comes to short-term rentals, I mean, give us some kind of context here. Is that about the maximum that you can withstand with that level of short-term rental? I mean, at some point there's a tipping point where you have too many and the market will correct theoretically.
Yeah, exactly. I mean, we see this in some other parts of the country, like in Austin, Texas, for example. You know, we don't talk about this in the report, but they kind of found their maximum velocity, for lack of a better word, and they're seeing their occupancy rates drop. And as a result, those excess short-term rentals are now flooding the housing market on the for-sale market. So they've seen a glut of new supply, and it's kind of brought their asking price down a little bit.
Do you think that the potential for interest rate cuts in the coming year or so will have any impact on this? Is there any reason to think that maybe we've had this spike in short-term rentals because people aren't willing to sell a house? They'd rather turn it into a rental?
I mean, we saw that happen during the pandemic when interest rates were sub 3%. That's when we saw a big spike across the country in short-term rentals. So it definitely played a role. It just harder to kind of distinguish how much of a role, but it was definitely an impact. When money is cheap like that, you tend to see real estate investments rush a little bit.
I want to give you the last word on this one. If you could give if you could sum up this report and the most important message for Utah policy leaders, policy makers, what would you tell them? Hey, here's what our study shows, and here's what you need to know about it.
Yeah, I mean, it's unevenly distributed. And when we think about the communities it's impacting communities that are heavily reliant on, the retail workforce, restaurants, hotel, right? So those communities are being impacted more than, say, the Wasatch Front or Washington County. So it is a tourism community problem more than a statewide problem.
Dejan Eskich is the Senior Research Fellow at the Kem C. Gardner Policy Institute. Dejan, thanks so much for your insight today.
Thank you.